Bam, 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 bam. We are going live. What a day. What a day. Up, up, and we're up and running. Good morning, traders and investors, and welcome to the pre-market edition of Wealth Dawn with me, Noor Menhart, where we build and protect wealth right here. So let's go. Let's do a market recap as always. Today's key events that move the markets, biggest pre-market movers. And then we're going to go over a couple of trade setups for this day, even if this week continues as it started yesterday, then we're going to have possibly a good week in the markets. So first of all, yesterday was a ish day. The entire market was expecting Jerome Powell's speech. He had his speech and nothing changed there. So the odds are pretty big for rate cuts in December, which is going to send the markets upwards. Now let's just take a look at events. So today we are going to have the ISM services PMI, which is expected to be 52.1. Now this actually will not influence the markets, and I even think that on Thursday we have nothing, and then on Friday we have core PCE, so we have inflation print. I don't think that would also influence the market. The inflation story is pretty much over. But let me just take out this right here. By the way, I'm wearing a shirt today. I have a couple of Zoom meetings coming up, so I have to look my best. But not for you guys. You know, not that I don't have to look good for you, but I want this to be chill. Okay, so let's bring in some excitement. Although I want this to be chill. So let's bring in some excitement. Let's do a recap of yesterday and let's see where the future are pointing today. Let's go over a couple of that iron condor yesterday would have hurt me. So let's take this out. I did a day trade, a 0 DTE on the SPX. That can be really bad. So the market closed up yesterday a negative 53 points, but the futures are pointing upwards today. So I can see, or you can see, that this is basically turning around. And again, please, applause for the greatest drawing of all times. What I'm expecting here, the markets to retest these lows and then go upwards. It could also calm down if anything really bad happens, but I'm expecting the S&P 500 to end the year on the positive. Am I expecting 7,000? No, I don't expect 7,000 for the markets, but do expect the S&P 500 to close in the positive this year. So let's go ahead and then take a look at NASDAQ, which is also in the pre-market looking nicely. On the green side, the Dow Jones trying a greenish day there. Let's see how this is going to play out. But the Russell 2000 is really playing into those rate cuts. The small caps are reacting to Jerome Powell's speech yesterday, and they are up, baby. They are really up. This would be because they didn't close the day on the red yesterday. So this would be 1, 2, 3, 4, 5, 6 yesterday, green day, and now the 7th day if this goes well. And then it's going to go into overbought territory, I believe, in the end of this week. So that is interesting. Good trade setup right there. Okay, the DAX, the German index, nothing exciting happening there. They're still expecting to see what happens between Ukraine probably and Russia. The VIX, it has had a couple of interesting days, but it's still closed on the negative side. Now, there's a lot of red candles here for the week, so don't be surprised if we are going to see a couple of green days in the weeks there. Meaning, volatility is still lying ahead. Is the light too harsh for you? Let me just take a little bit. I'm so white. Okay, let's go into the dollar, which I didn't put on the trade. I did say that the dollar is looking for me that is going to retest this region, go upwards, but it's kind of having here negative divergence, the dollar. That is interesting. So I think that the dollar will go into a little bit of a correction phase here, and then for the next leg up. So let's see, what did it do here? Up, down, the correction, did not get oversold. So even if the dollar breaks these moving averages, I still see, because rates cuts are coming, meaning the dollar is going to become strong as soon as other governments and somebody starts investing in the dollar, meaning buying US bonds. Now, let's move on to crude oil. Crude oil currently on the negative, hitting that 200-day moving average once more. It wants to come down, so it's still going down, down, down. This is awaiting the end of the Ukraine war, and then we're going to probably see a resurgence in oil markets. Gold, on the other hand, having a red day. Again, gold, I believe, is going to retest its 20-day moving average. And if it comes down between the 20 and the 50-day moving average, I would say that is a great possibility for you to add to another leg up for gold. Silver has had a beautiful run here. Check this out. So silver tested its, I have to, did I mess up the downside? There was the downside. Here's the upside. Okay. So did not hit the 227 Fibonacci extension. Interesting. It's still playing around between the 161 and the 227. Now this is a not a double, but it's a huge jump here for silver. Now it's coming down exactly as gold is coming down, and the stock market, I think, is prepared for a next leg up due to the fact that these commodities are coming down right now. Now, I'm not going to go over Forex, but Bitcoin having a beautiful green day. So exactly as predicted, I think this is where Bitcoin has found its footing, and it's going to go upwards. We're going to come to Bitcoin just in a couple of seconds. But Ethereum, same story here. I think Ethereum has found its footing. Want to add from some long shares of long-term hold for Ethereum. Perfect zone, hit its support zone down here, and I think this is preparing itself for the next leg up. Okay, that's pretty much it for this. Now let's go into the big ones. NVIDIA having it has had a green day. It's opening green. Let's see where this is heading. I think it's going to hit these two beautiful moving averages. So this is interesting. The 20 did not cross the 50-day yesterday. And also today we're going to open up again green, meaning the 20-day is going to curve up and the 50-day will curve up with it. Zoom in here and see that they're not touching. They tried to kiss, failed to kiss, and now they're going to go their separate ways once again. NVIDIA not coming down currently to its biggest support zone, which the first big support zone is the previous November highs, 2024, and did not test, which is now support for NVIDIA, and its lowest support, where I would consider adding like crazy to long-term shares, would be that 115 to 88 range. If NVIDIA does not hit that zone, then prepare yourself for the next year where it's probably going to hit that zone. But I think the most probable zone would be actually the 150 to 130 for a retest. Okay, I have a calendar on NVIDIA, so as soon as this is going to, just for a trade idea, as soon as this is going to signal for me a third green day, it's maybe tomorrow, I may sell some calls against my long-term call option. Okay, so moving on to IBIT. Interestingly, IBIT, exactly as predicted, I closed yesterday my call on IBIT. So I'm going to wait for this to have a couple of green days, then sell another call against it. Apple. Want to see my trades? Just check out the weekend edition. Apple is doing what I told it to do. Trying to do its squiggly lines. Apple up, Apple down, Apple up, Apple down. But it's I don't know where it has to have its AI moment in order for Apple to do that crazy boom upwards towards the 261% of Fibonacci extension. So Apple just cannot only with phones have its next leg up. It's up there. Do not forget, everybody's investing in Apple. Each time you buy a ETF, you're actually buying some Apple. You're investing your money in Apple. But anything else than that, new phone, new watch, new, doesn't matter. They need AI. They need their own AI on their devices. That would be the next leg up for Apple. Will they make it? Let's just keep tuning into my channel. You're going to find out. Okay, moving on to AVGO. Had a retracement here. It's going to open up. It's had one red day after. Actually, I should have moved in Google with it. To Google next up. It's had one red day. Now, why is AVGO Broadcom up? Ticker symbol AVGO. Because of the processors that they're creating. There are TPUs. And Google is profiting from that. And so far and so on. And now Google, let's move to Google, is up. Closed yesterday on the red day. Today it's trying to open on a green day once more. But I think this is going to go to a really big correction here for Google when all of this is done. Ooh, it's up there. It's up there. It's up its 20-day even. It's oversold even on the weekly. Let's go to 5-year chart here. And it's died on me. But it's oversold even on the weekly. So let's move on to Microsoft. A lot of squiggly lines here. We are currently testing if Microsoft will hold its 200-day moving average. So I would love to see a retest of this, but just touching the 200, the blue line here, just touching it and then to have his next leg up, or going to a much bigger correction because it does have here a beautiful zone of support. Sadly, the support zone is extremely large. So if Microsoft is going to have its correction, larger correction that it's already has had, then this is going to hurt. It's going to come down to the lower 400s, even going to the 300 zone. Now let's move on to my favorite for the current moment, and that is Meta. Meta did not have its big moments yet. And I think that Zuckerberg in the background there is working on something. So they did have, after their earnings, check out my complete rundown on the Meta stock. Should you buy it, should you hold it, should you sell it? It has had its moment, and now that moment has faded because investors are not happy with the capital expenditure, the capex. This was this was seen in the Meta stock having its massive retracement here, 13% or something like that. Let me just from here to here, it was 23%. Wow, 24% pullback on Meta. Should you be adding to some long-term shares right now? Well, check out my previous video. I pretty much explained what I think about this zone for Meta. Let's move on to AMD. AMD, beautiful support here at the 50-day, at the 100-day moving average. I was kind of expecting that it's going to come down in its major support zone, which was actually my green rectangle, which is actually here. Hey, there, rectangle. Come on. Okay, it's not, does not want to draw, but it's down here. It's actually between the 190 and the here and the 128 or 130-ish range. So that is a major support for AMD. Would I like to see AMD at that range and add some long-term shares? Of course, I would love to see it there. Now, currently, not playing in my plan here. It's trying to go higher, but we're not all said and done. I still think we're going to have 2 weeks of volatility right here in the first 2 weeks of December. Only then set us up for the next leg higher. So let me just reset my. Let me take a sip of my espresso. Delicious. Love espresso. Let's move on to Amazon. My favorite play in the market. Second favorite play after after Meta. Amazon did not have its breakout. So I'm watching for this. It has had beautiful Black Friday sales. Also, some Cyber Monday will be excellent for Amazon. But that's not all. They need data center play. They need AI play. They need robotics play. They need something to play to give them that next leg up. They need some sort of catalyst for the price to go upwards here. So don't be fooled by Amazon. They're going to pull a rabbit out of the hat. And remember, Amazon can outspend the competition anytime. Also their plan. They will always outspend the competition. Okay, let's move on now to my hated stock. Eli Lilly currently having another dark day here. You know what? Check out the weekend edition that I did. I explained something there. A major mistake that I made with Eli Lilly. How I closed my trade, why I closed my trade as I did. Check out that video. You're going to learn a lot. Because from here to here, mistakes were made. Especially for my part. Okay, now let's come into a couple of trade plays here. So first of all, Oscar Health. Oscar Health went down to its lower, where was it? 12, almost 13. Okay, 13. Let's call it 13. And now it's having a retracement. Now, I would say this is a perfect opportunity. Let's go to the options chain. Let's search for Oscar. The symbol OSCR. Let's go to the this 3-day chart. I think we're going to find something here. Let's go to the monthly. 17 days out. At 14. Let's see, what do we get? We're going to get 0.5% here. We are 3 weeks out. Let me just sneeze. Sorry about that. Can influence sneezing. So we're out there risking that much, but we're out there putting up $477 in order to get 25. Not that good of a deal. Let's take a look at Oscar once more. Go to this chain. Now Oscar is currently sitting in the middle, kind of in the middle of the Bollinger Band. So what are perfect trades for something like this? Well, strangles. Sell a strangle. So the difference between our strangle right here, remove this, is you would pay a 428 for a naked put, and for a strangle only a 532, and get the double amount of credit. Now this would be in 17 days a over 10% sold for the credit, for the debit. Sorry about that, for the debit paid. And now the worst part here is that, or the worst part would be that your left side would be tested, meaning your call side. This is pretty bad. You would need to roll this out. If the put side, also you can sell then the put side, and yeah, you can sell the put side and roll this one out. So it's going to come up 2 ticks. So from 16.5 to 18, I would just roll out in time. The put side, on the other hand, I would close up the call side, getting some profit, and let myself be executed on the 13th. Because you would get a really good company at $14 a share, which would mean if you have $1,400, perfect buying opportunity for Oscar Health, getting assigned with 100 shares. So this is what I would do. Best risk reward is here. Obviously, there are better, maybe are better trades out there. But Oscar Health in 17 days, get over 10% if this remains in the middle of everything. Also, I'm kind of waiting volatility to pick up here. Now, at the current moment, where the IV rank is only 18, maybe selling the strangle is not the best idea here. because you wouldn't get that vol crush. So if you have the stock, maybe sell a couple of calls against it. This would be even too dangerous. I would sell outside the expected move and also outside one standard deviation, so somewhere where the 20s are. Okay, moving on from Oscar Health to our next one, which is HIMS. Love to play HIMS. So HIM just hit its head on its, let's see, the red line was the 100-day moving average. And it's going to come down. It's going to try to open green again. And I think that HIMS from here on is going to do that zigzag upwards. Now there are a couple of sorry about that. There are a couple of possible plays. Calendar, buy a call in January 2027, sell calls against it. Buy a sell a put down here. Let's see. Do we get something juicy for selling a put at, let's say 33? Let's see, 33. Go to HIMS. Cancel this. Go to HIMS. Take a symbol. You guessed it, HIMS. Go out on the monthlies. Go to the 17 days at 33. Still within the expected move. Sadly, we have an IV rank of 2.9, so volatility is not that great to sell a strangle here. The skew is towards the downside. The expected move is to the downside. But check this. Ooh, this is a perfect setup. Now, you want to play it safe. Go outside to 31 or 32. I'm going to let you decide where the best setup is for you. But kind of take the 32. This is a pretty good setup. So for 32, you're expecting to pay $320. Expecting to get $60. Getting assigned HIM shares. At 32, for the long term, I don't think that's that bad of a trade. Possibility of profit, 83%. That's a good setup. That's really good setup. Now let's see. Next trade. Because let's just see here, a strangle, and I would skew it. So you get for even less. It's pretty dangerous. Take a look at the diagram once more. Okay, it's exactly there. It would come down, then go up again. The problem is with HIMS, though it has a MACD, the problem with the strangle is that the IV rank is far too low. If I would have a higher IV, I would consider a strangle, but at 2.9 IV, man, I don't know. I would just sell the naked put. Just do it like this. If you want to be really conservative, sell the 31 naked put and get 42. Let this open. Let's see how this handles itself. So at 12 delta, getting $42, risk putting up 310 and risking another 304 for it. It's a max loss if you be assigned. I kind of like it. Really like the setup. Okay, let's move on to the next one. I'm going to move now away from healthcare. We're going to move to bull. Let's get bullish here. Bull hitting its 200-day moving average, exactly as everyone 100-day moving average, as all of the other stocks hit their 100-day moving average and trying to come back. Now it's sitting in the pre-market exactly underneath the 100-day moving average. Let's see if we get so I'm going to again test if we get a sell a put option is a good opportunity. Go here to bull. I'm going to leave this trade on. Bull. We bull. Sell the 70 days at 8. I think $12. Putting off. Ooh, that's not good. That's not good at all. I don't like this trade. The problem is with bull, it's too low of a stock price. So at $9 share, nothing. There's nothing here. Just nothing here. They're expecting for bull This is sitting at exactly $8. Man, this is so risky. Now bidding us, getting assigned some bull shares right there at $8 a share. Not at the end of the world. It is a good stock. Let's increase the quantity. Risk reward. So the play is as following. Well, what I would consider a fair play. You are going to get a reduction in, if you want to own, if you really want to own full, I would sell almost the 9s. Get a reduction in price, get a signed bull at $9 a share, $8.5 a share or $8 a share. Now, as you can see here, there's almost two. The 8.5 is a better bargain. You're getting 12 cents reduction on the $8, and here you're getting 25 cents reduction on the $8.5. And let me just a quick calculation here. Where's my oops, I just closed it. So what I want to test here is that 0.25 divided by 8.5 is 30%. Oh, it's 3%. 3% reduction, and 0.12 divided by 8 is 1.5% reduction. So I would go with an 8.5 strike price and get a 3% reduction in price. Okay, I wouldn't mind that. Okay, let's move on to the next one. But anything else here? It's a good stock. It's just a good stock for the long term. Sell calls then against it, but I would buy even more shares. I would ramp this puppy up. Okay, and then kind of sign like, what do I have here? 400 shares. That's a good enough bargain for me then. Just let it rest and start selling over 1 standard deviation calls against. You're going to get a couple of pennies in time. This is going to, the stock price is going to rise. It's going to get more and more and more. And if you're going to not call the weight, but only sell one, okay, sell one, maximum 2 contracts there. If they're going to get called away, then by all means they're going to get called away. But if not, you're going to have some shares against which you can sell them calendars or even covered strangles and so far and so on. Okay, moving on to the last one. The last, actually two more plays. First of all, Rocket Company. Sorry about that. Rocket Company or Rocket Mortgage. That is a bullish setup right here. Let this puppy get overbought, and you could either sell diagonal against it. This is really dangerous here, okay, because this was a bull flag. This is a bull flag. This is a clear bull flag. Don't play around with this. If you see this come down, sell somewhere. So you're going to see something like this, probably the next couple of months. Even if you're going to see it like this, start selling naked puts down here. It's only a $20 stock. Start selling naked puts. So if I go now in the puts section, in the options section, I know I'm not going to find any good options trades here because the skew is to the upside. So if I go into Arctic, what's the ticker symbol for Rocket Lab? I constantly forget this. RKT. So RKT, Rocket Company. Go to the trades, 70 days. Nothing here. You're going to get 20 cents, and you have to put up $1,780. No way, no chance. Let it come down. That's the idea. If it has a couple of red days, then these are going to be really juicy. The sell and bid, the bid and ask spread is going to get now. Because currently you're getting 10-cent spread. That's immense. That's 50% of the spread. Oh, of the price is a spread. It's no way. Don't touch it. Let it come down, let it come to you, then you can sell some naked puts against it. Okay, moving on to the very last one, which is hood. Hood is setting itself up for a nice little strangle here. I would check out now the 155 and the 95, 96. So hood, Robin Hood. Let's go to hood. Hood. Let's look for a strangle. Naked puts, I don't think we're going to find. Wait, what's happening here? The right one? Hood. Robin Hood. You can see any kind of standard deviation. Something is not right with this Q. Okay, let's go to the week. Interesting. The monthly, do they have earnings? Is that why? Oh, no. Well, whatever. Still, let's look for a strangle. On the 10 days, let's see here. Q is nice. That's not that good. Over 10%. Yes. Over 10% here in 10 days. That is nice. That's really, really good. 20%. So, $1,252 in buying power required to get $247 if it will never hit 110, and this is outside the standard deviation, and 135. But for an even greater one, you would need to go outside. I wanted to see the monthlies here, but can't see it. So we said that, let me check this once more. Bollinger Band, 140. 102, so 145, 102. Okay, let's see if we get something juicy there. 102, so the 100 and 145 here. So I'm going to go through, going to go outside. Let's go outside. Let's take the safer route here. Wow, 511. That is excellent. That is nice. Go even further out, Now, I would say that this is the perfect one. Take it, get 511, 74% chance of profit. I think you can't see my face, my beautiful face. Gone. So just check out this one, $511. That's a lot. This is almost 50% return in 45 days. But I would say, take it, manage it at 21, the tasty trade way of doing this. Manage it at 21, all at 50%. If you would get in 21 days, $200 something, take the profit and run. So I'm going to come back now. There we are. Okay, that's it for today. Do you have any kind of questions or suggestions for other trades? Leave them in the comment section below. With this being said, I'm Norbert Menjhardt. I build and protect health and wealth right here at Wealth Done. Catch you tomorrow in another live edition. Check out the previous video yesterday where I'm talking about Meta. You buy, sell, or hold it. Catch you tomorrow. Have a lovely day.